All right, GM everyone. Welcome to Apex Office Hours number 9. My name is Pete Humison, founding contributor here at Apex. And we've got today Parker White, founding contributor at Apex as well. For those of you who are attending or listening to the playback for the first time, not familiar with these spaces, we host these, roughly once a week. The idea here is give current users as well as prospective users a quick overview as to what we've been up to, as well as give the opportunity for folks to ask questions and us answer them in real time. Parker, how you doing? Let's do a quick mic check if you don't mind.
Check, check. I'm doing well.
Perfect. Yeah, you're doing well. I'm doing well. The rest of the team is doing well. Though we probably could catch up on a little bit of sleep and kick up our feet, but there's a time and place for that. Right now, growth has been absolutely insane, to say the least.
Yes, absolutely.
I mean, as sure as everyone who's been following Apex knows, we've seen quite a bit of growth over the past few weeks. We haven't done a spaces in 2 weeks, largely because I think the team was traveling last week and it's been some other things up in the air. But nonetheless, like I said, we're looking to maintain this once a week cadence. With that said, just to give a quick kind of overview to folks here in the past 2 weeks, Apex has added $160 million in TVL. In the past week, we've added 100 million alone. That kind of puts us at roughly 415 million as of today, with approximately 280 million of holdings in Stretch STRC, as well as 15 million in SATA, which is Strive's preferred equity. Some additional just kind of quick updates here. We are the 24th largest stablecoin according to DeFi Llama, which is a crazy milestone to have achieved in less than 11 weeks since launch. We've got one more week to go in the first season of our points program, with season 2 starting shortly thereafter. A lot of stuff on the partnership announcement side of things. In particular, we did announce our partnership with Royco, which was tranching APY USD into senior and junior tranches, which effectively gives market participants the ability to allocate to 2 different risk stacks relating to our yield token. A few more quick hits here on the security side of things. We did announce a little over a week ago that we completed our 4th security audit with QuantStamp, which is relating to APX USD and APY USD for our bridge token contracts, which I think is notable. Just given some of the hacks we've seen historically relating to bridging and just some of the stuff recently in DeFi. As well as this week, we published on our blog 25 reasons Apex is built to be trusted, where we kind of just cover all the various different processes and procedures we have in place to make sure the protocol stays safe. And a quick little bonus, this one is one of my favorites. It came to our attention a week ago that actually a market had been spun up for the Apex token FDV on day one, which I thought was really cool. The team will be watching that, seeing how the market progresses with time. Um, but yeah, Parker, is there anything that I missed, or I guess is there anything that you want to hit on or highlight? I mean, it's been a lot over the past 2 weeks.
Jeez. Yeah, it's been a oh boy, it's been a whirlwind. I think the really cool thing here is that the we're definitely hitting an inflection point. I mean, hell, in the last what's the number? In the last, like, 20 minutes, we had about 4 million come in. Same buyer, 500K orders every, like, 60 seconds. Um, and so we're really starting to hit an inflection point here where historically, and I say historically, like, a month or 2 ago, you had a lot of naysayers. You had a lot of the curators that were like, like, Stretch is gonna blow up. It's a Ponzi scheme. Um, there's how they're gonna pay the dividend, whatever. A lot of the kind of just standard points of FUD that weren't really well thought out. And I think ultimately we're just um rationalization for not getting involved, and candidly rationalization for not digging in. It takes and I'm going to go off on a little tangent here, but there is mental strain required to dig into a new project. It's far easier to, mentally, subconsciously to just dismiss the project because then you don't have to spend that brain energy. Like your brain naturally wants you to dismiss things because it's like going to the gym. Your brain wants to find ways to not go to the gym and convince you of things or give you ideas and reasons not to go to the gym. So digging into a project and understanding how something new works is like mental gym, and your brain doesn't want you to do it. And so as soon as you hear oh, it's a Ponzi scheme, it's real easy to just latch onto that and be like, now it's a Ponzi scheme, move on. That's like the way you can shirk the mental effort. So we heard a lot of those things, but I'd say in the last 2 or 3 weeks, funny enough, we have people coming back around, people that said, gave us, kind of wrote us off, said this was a Ponzi, whatever. They came back around and now they're like, how do I get in? I want to buy. We want to, lend on Morpho. We want to KYC or KYB for mint and redeem. And it's like, wait, 2 weeks ago, you told us this was a Ponzi scheme and too risky and you weren't interested. And now you're like, nothing has changed except our size and our growth. Um, and so I think we're kind of reaching that size where some bigger names feel comfortable to get involved. And I think that's just really accelerating and kind of creating a feedback loop because as we grow larger, there's more and more names that want to get involved. And we've, just in the last, 24 hours, we've had some conversations with large, $4 or $5 billion pools of capital that want to put hundreds of millions to work here. And that really just snowballs. And before you know it, we'll be talking to groups that have hundreds of billions that want to put billions to work. Um, and so, it's really positive what we're seeing, really exciting growth, and, fantastic innovation on the underlyings too, right? With SATA today announcing the switch to daily dividends, branding themselves as the daily dividend company. Super, super powerful. I think Stretch is gonna do daily very soon, as well. No inside knowledge here. I'm just, guessing. Um, and this is like really, really innovative, cool stuff. Like you can take products like this, the Strive guys, strategy, like you can sell this to complete non-Bitcoiners. I mean, Peter Schiff should probably buy this. Like this is an instrument that pays daily dividends, paying 11, 12, 13%. Like that's really powerful, regardless of if you believe in Bitcoin. So also really cool developments happening on the underlying, which I think only fuel what we're doing here at Apyx and, just so many positive things going on. It's kind of shocking to me that Bitcoin's still, right around 80.
Yeah, great points all around. I mean, there's a lot to unpack there, which, maybe there's a few things we could hit on. But before I can ask you my next question, just as a reminder to those in the audience, if you do have a question, feel free to throw up your hand. We'll bring you up and you can speak. If you're a little spaces shy, don't hesitate to, of course, just leave your question under the pinned comment on our profile. But Parker, I think 2 weeks ago, someone had came up and they were asking us, I forget what exactly the question was, but it was like, what do we see the opportunity lying in? And there's a number of things that we listed, but one of them was just like, the market kind of education, saying that we felt like it's still really early. A lot of people don't really understand Stretch. They don't understand, quite frankly, Strategy's capital stack and how they're able to fund this. From your vantage point, do you think like some of the growth we've seen is also, kind of reflective of just broader market education? For example, CoffeeZilla got torn apart by Jeff Waltman from Strive, which that was a video I think that did like a really good job in terms of educating people. But do you feel like just scrolling crypto Twitter and some of the conversations you had with folks, like people are starting to finally kind of catch up and understand this thing?
Yeah, I think there is a growing understanding. I do think on the other hand, a lot of people still don't understand, but are going to ape anyways. I mean, that's it's basically the definition of an ape, right? Someone who doesn't understand but buys anyways. Um, so I think you're just seeing more and more aping going on. I do think people are walking up the education curve, the learning curve, but I think there's still a lot of misinformation out there, a lot of, lack of understanding. And I get it. It's a brand new product, and it's really only been around for, I guess 10 months or so at this point, but only on the kind of in the spotlight for the last few months. So it's understandable that's going to take a little while for people to understand it. But that just means we're, to use the cliche, we're still early. There's still a lot of time to, you know, walk up the learning curve, which also makes me incredibly bullish for what's going on. I think, Stretch is a $10 billion instrument and is still not widely understood. I mean, hell, maybe maybe it becomes $100 billion instrument before it's widely understood. There's just so much runway here for this thing to grow.
Yeah, totally. We put out some projections a little while ago as far as how big we thought Stretch could get to for, I think, a multi-year period, and we need to go back and update it, but I think Stretch is actually pacing well ahead of what was projected, and I think we were at like $100 billion in 3 years. I mean, that maybe it's like 2 years, maybe it's 18 months. I don't really know, but nonetheless, super interesting, and yeah, the growth has been insane. And you said something a little while ago too, is like it's pretty remarkable what people are building on top of it and the innovation it's leading to. And you had called out Strive moving to daily dividends or announcing their intent to move to daily dividends. Would love to get your thoughts on like what is the implications for, not just Strive, but all kind of preferred equity coming out of digital asset treasuries, Strive and Strategy being the two largest.
Yeah, I mean, kudos candidly to the Strive team for, I think they mentioned this in their announcement, but getting a lot of pushback and hitting a lot of hurdles. Um, and, this will just make it a lot easier for all other issuers to do daily if they so choose. And candidly, you basically have to do daily now. Like, Strategy could make an excuse if they wanted, although Sailor's an innovator. Like, he's not going to, um, be prideful here and stick with bi-monthly. Like, absolutely, he's gonna switch to daily. Um, but, Strive really raised the bar, and so I think basically every issuer here needs to go to daily. But what's so powerful here is, you think about the Bitcoiner's wet dream of, the entire world being built on Bitcoin. This actually starts to get at that world. Like, you can envision a future where there's $1 trillion worth of prefs issued. They all pay daily. There's maybe 10 different companies that issue them, some on Bitcoin, some on ETH, some on Solana, maybe a couple on some other random ones, but like mostly the top three assets. There's $1 trillion worth of securities issued. They all pay daily. You actually really start to truly have crypto backed money markets. And that is just incredibly powerful. And yeah, sure, in that world, is Strategy having to pay 11.5%? Probably not. They're probably able to go down to 6, 7%, maybe, maybe less. But like, um, yeah, this is a brave new world. And I know, sometimes it gets negative connotations, but like, truly finance is being revolutionized here, traditional finance. And I don't see how, you know, I know a lot of companies don't issue preferred stock anymore, but like, this is going to totally cannibalize the market for JP Morgan preferred stock and Boeing preferred stock and, all the other preferred stocks out there. And it's going to start to cannibalize bond issuances where if you're a triple B rated entity and you want to issue a bond at 6% or something, like, why on earth would you do that when you could just buy Stretch at maybe it's paying 7 or 8 or I mean, certainly today it's 11.5. Like, So I think credit markets are going to be materially impacted here. Certainly the whole pref market's already been shaken up. Um, I think this is like as big of an innovation as the ETF or the mutual fund or the common stock, or I mean, any of these instruments. Arguably a lot more innovative or a lot more disruptive rather than DATs in general. Cause, DATs were like, well, let's just take this crypto asset and stick it into a public company. Like, there's lots of public companies out there. Cool. But this is actually really, really unique from a global finance perspective. And so I would be shocked if in 18 months, so end of next year, we're not over 100 billion collectively across all the instruments.
Wild. Wild. Yeah, totally could see it. I mean, to your point, like, I mean, there's all sorts of people, all sorts of capital allocators that are going to look at, Strive and presumably strategy and just say, man, I gotta like leverage this instrument to put my capital to work. And, even if it's just for a week or so, like, it'll be really interesting to see how it shakes up other markets, to your point. Um, is that to say, we've taken down the unstaking period for APY from 30 days to 20 days, which we felt was a meaningful step. Do we now have to aim for daily redemptions?
We've got some stuff. We've got some stuff in the works to give some flexibility there and shorten the redemption window. Um, I will say part of the redemption window purpose is to avoid bank runs. So, particularly on the weekends, but also just in general, like we're the largest holder of Stretch on the planet now. Um, I don't really want to be in a situation where we have to dump $150 million worth of Stretch at a moment's notice, because that could be a lower liquidity, like bad time to do so. So once daily dividends come, hopefully liquidity smooths out more and it's a little more even throughout the month. But still, like, we don't want to have to fire sale a giant chunk of the portfolio to meet, instant redemptions, because that hurts kind of everybody who's left, right? It pushes the price of Stretch down, it lowers the redemption rate for everybody else. And so there are some reasons beyond just avoiding arbitrage for um, the current 20-day period. But I think we can certainly tighten it up once Stretch goes to daily and liquidity comes in and kind of spreads around more evenly. Yeah, we could definitely tighten it up.
Yeah, well, looking forward to that. I know some people in the community are as well. Cool. Yeah, let's we can shift gears to some of the questions that came in, and as a quick reminder to the audience, if you do have a question, feel free to raise your hand via the emoji, and or drop your comments under the pinned tweet on our profile. We'll bring you on up to speak. A couple of questions relating to, I guess, season two, TGE, et cetera, et cetera. Um, One of the questions is, when is season two end? Which we published a blog post, I wonder, a week ago or so, talking a little bit about what to expect in season two and the airdrop itself, Apex airdrop. No formal timeline has been provided for season two ending, as well as the TGE of Apex governance token, but we do expect to share some updates likely next week, just relating to season two in general. And we know folks are going to be curious to know when season two ends and the TGE is coming. Rest assured, we'll communicate that when the timing is right, but nothing to add on that front. And then I guess there was, someone was just
Yeah, I can
wanted. Oh yeah, go ahead.
I can actually jump in on that just to explain some rationale. I get it. People like, when's it going to happen, and how do I value the points? Because, if you don't know an end date, it's tough to model how many points they're going to be, and so I get that, like wanting to get that certainty. Um, and the challenge that we have to deal with is lining up the TGE date relative to the market environment and relative to TVL growth and relative to other projects that might be doing a TGE. And so flexibility there is just really important, unfortunately. And as soon as we share a date, it's XYZ day, we're going to be held to that. And changing from that really becomes an issue. So we certainly like to do things fast here. And we want to go as fast as possible. But you could foresee a scenario where waiting just a little bit longer than as fast as possible. And, remember, we launched the whole project, um, I guess, like 3 months ago, not even 3 months ago at this point. Um, like, we certainly want to move fast, and we're going to do TGE sooner than, most projects or the average project or something. But giving a fixed date kind of boxes us in, and we think that flexibility is important. And believe me, we care about the token price more than anyone. The team personally has more tokens than anyone. The foundation has quite a few tokens. Like, if you're a season one points enjoyer, um, rest assured there are people far, far larger than you that want this TGE to go really well. And we're not advantaging anybody. In fact, in most cases, we're disadvantaging the large um, participants relative to the folks in the points program. So rest assured, we want a really successful launch here. And right now, we think the best way to do that is to not share a specific timeline for TGE. And you can also imagine the reason we won't share a timeline for the end of season 2 is because, we'd like TGE to most likely be sometime during season 2, or coinciding with maybe the end of season 2, something like that. So, um, anyways, keeping our cards close to our chest here, but that's the reason why.
Yeah, and I will take this as an opportunity to remind folks that we don't have the pressure of VCs who have participated in an early fundraising round to get us to rush the token out the door. Parker kind of alluded to this. The team, personally invested. We kept the cap table super small. It was intentional. We wanted to allocate as much of the token as possible to giving away via airdrops and community and growth and all that good stuff. So fortunately for us and everyone on, quite frankly, the project, we don't have VCs on our back rushing to get the token out the door. So I think that gives us a little bit of more confidence internally that we can do this at the right time where everyone will win. Somewhat similarly, Parker, we had a question. Can you share any insights or a ballpark figure regarding the FDV at launch?
Um, I don't know, billions, I guess. um, that's kind of a joke, but in seriousness, I think there's a poly market on this. Look, we want this to be a giant, giant project that is one of the dominant, um, top 5 stable coins in the world, over the next decade. Maybe we can be like top 2 or something, 2 or 3. Um, so we're very serious here. We want this to be incredibly large. So FDV at TGE, like, I don't know. Um, you know, it remains to be seen. Lots of projects out there that have different ratios of FDV to TVL. Um, and you can kind of run the gamut there from many multiples above 1 to below 1. But again, short-term token price, like, we don't need to raise capital. The foundation does not need to sell tokens around TGE. It'd be great to increase the reserve, but we're like, our runway is infinite and getting longer. So FDV at TGE in my mind doesn't really matter. Like, if people want to dump, fine. But like, the hope is that a lot of people will stick along for the ride because, over the next 5 or 10 years, just like you might expect with any, good startup, the hope is that the token's worth, um, you know, tens of billions, hundreds of billions, and we're one of the most successful projects in crypto. Um, Obviously, very tall order, very high ambitions, but, it's what we want to do. Um, But, short term prices can move around. I have no idea where they're going. I'd get in trouble if I tried to say, mostly just because I'd be lying if I knew, because, anything can happen in the market's the market. But those are my thoughts there.
Cool. Good deal. We'll use that as a segue into the next one. Speaking of reserve growth, we had a question. Can the team elaborate more on how reserve growth is calculated and what factors primarily drive it over time?
Yeah, so a couple big ways to grow reserves. Um, the first and obvious one is to pay out less than we receive. So if we receive 5 million in dividends in a month and we pay out 4 million to APY USD holders, that's a million that's booked for the reserve, which is great. The other way to grow reserves is by participating in these IPOs or even just buying stuff at a discount. So, when SATA was trading down around 99, or when Stretch comes out after X dividend and maybe trades around 99, like we come in, we scoop it up, and then it bids back to 100, and then we book those gains, and those flow through to reserves as well. So, the IPOs are even bigger opportunity where they IPO at, say, 80 and they climb their way back to 100, and we book 25% growth going from 80 to 100. So to the extent that we can do that, that also helps to grow the reserves. And then the last method, of course, is selling governance token. So when we TGE, there's not going to be much float out there. I mean, the investors have a lock. We're like not doing big market maker deals. Like, we're very protective of the token. So the supply is going to be really constrained. So if it comes out and is doing really, really well and there's a lot of liquidity, maybe the foundation would sell some and help get some out into the supply, get some into the float, give folks a chance to get their hands on it. And then we just take all those dollars and flow it back to the reserve. So it makes the project more secure, more safe, having greater reserves. So a couple different ways that we can grow the reserves, and we're certainly mindful of it and doing our best, while also not, like taking our yield to zero and just keeping it all, because that would also kind of kill the project.
All right, cool. Well, thanks for answering those. That was actually the last question of the ones we received. Is there anyone else in the audience that wants to come on up and ask a question? If now, it's your opportunity to, and if not, we can close out and we'll catch you guys on the next one. Parker, any parting words, anything in general you want to hit on or highlight that we didn't have a chance to do so already?
No, I'd just say, really appreciate everybody who's been supporting us from especially early on. And yeah, thanks for being along for the ride, and we'll continue to ship and try to be the best project that we can be.
Yeah, I'll echo that and just say thanks everyone for being supporters and providing feedback, be it good or bad. We always welcome any and all constructive criticism, and there's a number of people in the audience that have been around for quite a while. I know Corn Harvest is one of them, Ram is one of them, PZ is one of them. So thank you guys and everyone else for showing us love and coming through. And yeah, we're looking forward to continuing on the journey with you all. So thanks again for everyone coming into Apyx Office Hours number 9. This is the end of the 9th edition. We'll catch you guys in the next one. Thanks. See you, Parker.
Yeah.